Welcome on board, and Pankaj Pandey, who's joining on from ICICI Direct. Pankaj, hi there. Good to have you on board. In fact, let's get in your take then as to what you made of the move that we saw within the entire real estate basket, given that it was a stellar up move across the board.
So real estate as a sector, our sense is that it's a 5-6 year cycle. Probably we are at the second year of that cycle. But unlike 2003 to 2007, our sense is that you'll see more of a measured growth both in volumes as well as in pricing. Unlike the time earlier when the pricing had sort of gone up. Now, inventories have come down significantly if you look at from for top 7 cities. So it's down to about 17 months. And our sense is that a good part of the rally is already there in most of the stock prices. But what we are liking is the ancillary segments, which is the essentially a building material segment. So there we are liking Kajaria Ceramics. We have given a buy on green ply because our sense is that when these deliveries start to happen in the next 1 year, the demand for these home building products should go up. In addition to that, Century Ply is another stock which you have been liking for quite some time.
What do you make of the quarterly update? Do you think we are in for a good earnings season? Because the numbers what we've bought from Federal Bank, Bajaj Finance, even for that matter, IndusInd Bank, and now from Dabur, all of them are indicating that things could look up for the Q3 earnings season.
So I think, Nikunj, overall our sense is that BFSI is expected to sort of keep doing well if you look at the advanced growth for most of the companies. And I think the only challenge or the factor one needs to watch out for is whether there is a compression in margins, what we see. But our sense is that for next 1 year, probably PSU banks look a lot more attractive, largely because of two, three perspectives. One, if we start getting inflows on the bond side, it is possible that the bond yields can correct by 100 odd bips going forward, along with, in tandem with the rate cuts of 75 bips. And so obviously you could have some treasury gains. And on top of it, our sense is that whatever excess SLR some of these banks might be holding, I think that also can be put to use in terms of lending, which will fetch better margins. So PSU as a basket is looking good, and then we are liking some of the NBFCs or smaller segments, like say for example, small MSME financing or even the microfinance as a space.
What has been the tone of retail activity in last 10-15 days? I mean, because enough and more has been discussed about frenzy in small cap, craziness in mid cap. What is the real picture? I look at the number of demat accounts, the data which has come out, it is up 50% month on month. And I said, wow, 50% month on month jump in new additions. So what's happening at ICICI Direct?
So I think overall there is not much of a fear. You see, from an investor perspective, I think there is an anticipation that we could see some correction in between. But I think from a valuation perspective, people are still not worried in some of the stocks. So I think the mood continues to remain quite robust.
What would you say are your top 3 ideas for mid and small cap stocks? Let's keep large cap stocks aside. Let's keep Nifty 50 and companies which have a market cap of more than $15-20 billion aside. From the pond, which could be called as a $2-3 billion pond, what are your top ideas and why?
So Nikunj, what we are liking is Ugro Capital. It's an MSME lender. Overall expectation is that the AUM will grow at 50 odd percent, and ROAs will inch up from 1% last year to 3%. And so here we have a target price of 350. We are also liking Greenply, like I said, with a target price of 295. I think their MDF plant is operational. The capacity utilization for that should go up going forward. And that should fetch better margins. Then I think what we are also liking is cement as a space. So Birla Corporation is another stock which we are liking with a target price of 1755. Lastly, the volume growth is expected to be decent at 7%, even with given the fact that they have commissioned 4 million ton kind of incremental capacity. And obviously, the EBITDA per tons are expected to improve for entire industry, even for this company, from say 490 or to closer to 1,000 rupees per ton. And valuations are okay at I think 7.5 times EV by EBITDA.
Pankaj, what is the update from a Kalyan Jewelers telling you about the kind of demand that's out there? The Q3 update is, of course, showing very, very robust momentum. More importantly, their Middle East exposure as well is benefiting them a lot. That, Titan, some of the new age some of the new IPOs as well from within the same space that we've seen as well have got some massive subscription. They've all been holding up very well from the issue price, and first day of listing gains, etc. as well have been made. Any new opportunities here, you think?
So largely, we have been liking more of Titan. So typically, what happens is that when the gold prices inch up, obviously people will buy lower grammage because largely the ticket sizes or the budget largely remain constant. So volume sort of takes a backseat, but our sense is that it sort of normalizes over a period of time. So I think Titan has got a fairly long runway for growth, given the fact that the unorganized pie is still quite large in a overall gems and jewelry space. So I think nothing beats Titan from a structural perspective.
Titan 52-week surge, 46%. Extraordinary, isn't it? Indigo, by the way, has removed the fuel surcharge which they were charging to the passengers, because A, ATF prices have come down. B, I think the pricing now with Air India coming in with new planes coming on board from Akasa, pricing is also getting very, very competitive. But Indigo as a stock has done extremely well. Removal from air ticket effective 4th of Jan 2004. तो कुणाल टिकट करा लो भाई, अब तो सस्ता हो गया, सरचार्ज नहीं देना पड़ेगा.
Yeah, I agree.
How's the stock looking?
I think it's been actually looking very good, Nikunj, over the last 3-4 months, because there was a point when even when the markets were getting into a slight choppy phase, I think in the second half of 2023, I think even in that phase, Indigo remained more sideways. I think at 2400, 2500. At that point, the stock took almost a 2-3 months of sideways consolidation. And when the markets went into a breakout kind of a mode, we saw the stock moving up from 2500 to now almost on the verge of breaking the 3000 mark. In fact, the indicators on the weekly and the monthly charts are much more better for Interglobe Aviation this time around than what they have been in the post-COVID rally for the stock, when the stock started to move up from that 1600, 1700 of a major consolidation phase. So which means that what the stock is actually doing over the last 2 years is upping the base for itself from 1600, 1700 broadly to now 24, 2500, which is the new support range for Interglobe Aviation. And the indicators are much more stronger this time around, which means that if in case there is any kind of a short-term correction or any kind of a pullback, the tendency for the stock to fall sharper would be extremely less this time around.
Okay. What is your view, Pankaj Pandey, of the aviation sector? Because this is one sector which I think is not growing, but it is blooming. No new competition, 2 large players, the other 2 getting marginalized, one has shut down, new airports are coming in. Indians, they now suddenly prefer time over price, which is that they're happy to travel air rather than rail because you want to save time. Do you think this sector is in for a good short-term, medium-term and long-term wealth creation path?
So Nikunj, I think a couple of things. I wish Air India was listed, so we'll have a better sort of plate to sort of look at. But our sense is that when you look at from a number perspective, you have about 15 crore flyers as of now. And we've seen that even, say, for example, a religious place like Varanasi, we have seen about 8 to 9 crore tourists sort of coming in. And possibly if with Mandir sort of getting inaugurated in Ayodhya, our sense is that easily you could see 8 to 10 odd crore kind of a tourist inflows. Obviously, not all of them are going to take the air route, but I think this is sort of opening up a lot of opportunities for the aviation players. A good part is that the overall aviation turbine fuels are also sort of softer. So I think this sector is in for a good run. We don't have a coverage on Indigo. I wish Air India was listed, so then we could have a better this thing. But obviously, long-term outlook looks quite promising for this entire sector.
That's the take coming in. Kunal, if you had to pick out between an Interglobe Aviation or one of the hotel names, which one would you initiate a fresh long on?
I'll take, if you ask me for one of them, then I would probably go with hotel stocks, because that's a more a slightly high beta stock, high beta space as such. You know, we've seen Indian hotels moving up from that 160 mark, which had been a huge resistance for the stock for I think 4-5 years till 2020 odd. From there, the stock had moved to 300, 350, and now 400 plus levels. We've seen chalet hotels, Lemon Tree, again a very similar kind of a manner, where these stocks have managed to take support at their respective 50-day moving averages, had not broken below their 200 DMAs, and then when the trend started for the hotel stocks, we saw these stocks moving up into a bit of a high beta pocket. So the other positive part is that there are a lot of stocks to choose from the hotel stocks. That also makes the space a lot more attractive. Oriental Hotels is something I think which is trading at 125 plus levels. That's also interesting short-term charts building up, closing above that triangular pattern on the daily time frame chart. So I think these flew of stocks I think make the space a lot more interesting, and because of the high beta nature, I'd probably pick this space as compared to Interglobe Aviation.
What a year it's been again it started with Indian hotels, and now more and more hotel stocks are getting listed. There is a view from Rajat Rajgadia on why they like the hotel travel in the tourism space. We'll try and take an excerpt out of that view and some of the stock specific ideas they are bullish on. There's one stock, and I would like to call it the sumo stock, where I think 2024 could be a better one. That is State Bank of India. 2022 was good, 2023 was flat. Could it be the elephant dancing again? 52-week change for State Bank of India has been just hugging on to a flat line. They're growing at 14-15% plus. Their NIMs are well under control. They are not raising capital. So the 2-year change in State Bank of India, frankly, has not been very breathtaking. And post-COVID also, when look at Bank of Baroda. Actually, let's look at it. 5-year change for Bank of Baroda, 5-year change for Canara Bank, 5-year change for SBI, 5-year change for Union Bank. While we'll wait for those graphics to get loaded, even it'll be learning for me. Bank of Baroda 5-year change, I'm talking about the pre-COVID era, when all of them were like completely slammed down because of NPA problems. Bank of Baroda has given you 95% return. Next, State Bank of India has given you 110% return. Then we'll turn it around, and then we'll actually see Canara Bank, it has given you 64% return. And similarly, maybe a Union Bank where the consolidation is at play. They took some time to merge. A lot of banks were merged. Union Bank has become a large bank now, has given a 34% return. So Pankaj Pandey, the 5-year return in a Union Bank or a State Bank of India, some would argue and say, is not breathtaking. PNB has given a 19% return. So I may look at the last 2-year return and say, wow, बहुत बड़ा return है. PSU banks have got re-rated. But the reality is SBI 100% in 5 years. PNB 20% in last 5 years. Union Bank 34% in 5 years.
Nikunj, historically, if you look at, you're right that these stocks haven't really sort of done so well, while in the recent past they have done well. And I think our sense is that this is one space within the entire BFSI which has the potential to sort of get re-rated. Like I said, if RBI also goes for a rate cut of say 75 bips in line with what US Fed does, potentially the yields can drop by 1%, and obviously that would mean some bit of a treasury gain for some of these PSU names. And SBI is trading at about 1.2 times book, and I think with 14-15% kind of a growth rate, and most of the major business parameters being okay. I think potential for re-rating for SBI is obviously there. We have a target price of 725. It was part of our Mora pick. Besides that, what we are also liking is some of the other tier 2 PSU banks, like say, for example, Bank of India or even PNB we have given in technical recommendations. So I think PSU banks is a good space to be there into. The valuations are definitely quite reasonable. So it's not gone through the roof in like you see for some of the pockets. So we continue to be very constructive on the entire space.
Nothing of a move really in the last 5 years for most of these banks. And maybe that's why you can see bigger scope of performance from them. Kunal, yeah, go ahead.
Balance sheets are right. See, you look at the scenario, SBI and Kotak commanded huge amount of premium. Why? Because that time there were only two banks where you were confident that the book quality is not going to be bad and NPA cycles will not be a problem. So they were trading at a disproportionate amount of premium. Everybody just wanted to say, okay, we will only buy HDFC Bank and we will only buy Kotak. So the price to book and the valuations were bidded higher to historical levels. Now that is not the scenario. For next 2 or 3 years, most of the banks have a good quality book. So that premium which Kotak and HDFC Bank was getting because you were the only loaners with a good book quality, that premium has got diluted. Second, PSU banks right now have access to capital. When you have access to capital, you can lend. Access to capital comes largely because government is standing there, okay, when you need money, we are there to support you. And then the liability franchise, which is the deposit, which is the fixed deposit which are going, I think they are going there again. Look at the CASA ratios, what they have. So they have this launch pad, they were ready to lend. And think about the salaries in the private sector bank. Look at the salaries in public sector banks. Look at the attrition in private sector bank. Look at the attrition in public sector bank. They don't have any problems. So I think a lot of operating cost benefits are kicking in. So book quality, infrastructure, economy, all those factors have come together. This was same sector, Aisha, in 2019. You and me have covered it. Government had to bail them out. They were on their knees. Government had to infuse 80,000 crore. And today they are going to the market and they're raising fresh capital, BOI, on their own. Capital is available on tap and everybody wants to invest in it. So,
And
the
also
pendulum
now
has
with
swung.
Uday Kotak, with the HDFC merger, those two have also had their own set of issues.
And also think about it, I mean, who says private banks are the holy saints, man? I mean, ICICI Bank, look at what they did. Look at what happened with IndusInd Bank after LNFS. Look at what happened to Yes Bank. So this assumption that private banks are holy saints and the PSU banks are like the, laggards, I think that whole perception has changed.
Yeah, and that clearly seems to be playing out. But just a quick check-in on the pre-open rates, 9 a.m. on the clock. And for now, 21,700 holding out on the Nifty, and for the Sensex as well, we're comfortably in the green. Good time then to find out some mid-cap strategies from our charters. Kunal, what's looking good?
So I'll go with an interesting mid-cap name. It's Philip Carbon. That's a stock which trading at 255 approximately is showing a very strong, Bollinger Band contraction on the daily as well as on the more visible on the hourly charts for itself. So I'm expecting a breakout of the charts for Philip Carbon and an upward move towards at least 270, 275 over the very near term. Stop loss for this trade could be kept at 250.
Okay, there you have it. It's some top recommendations from Kunal. And Vaishali, you were talking about a focus on mid-caps this morning. So what would be that one top mid-cap bet?
Well, so I'm focusing on Jupiter Wagon as I had recommended, and I think it's ready for a target of 350 to 360 to start with.
All right, Pankaj, before we let you go, an interesting note as well coming out on the entire utility space, the likes of NTPC, Power Grid, etc., talking about how the initial read of the draft regulation suggests that there will be a limited impact. Your view on these stocks?
I think thermal power ROEs have been kept intact at 15.5%, Aisha. And I think for pump storage, there has been an increase of 50 bips. So obviously that is positive for some of the players like NHPC and SJVN. But I think our topic always remains NTPC in this because this company has got the balance sheet to sort of take the IE portfolio quite significantly higher. And power as a space is looking quite good for the next 5-7 year perspective. And our sense is that government focus will come back once once the elections are out. Probably the Electricity Act, which has been pending. So I think that so you have a lot of triggers in place for this sector to sort of keep doing well. NTPC has already achieved our target price. Post results, we'll look at reviewing our target prices, but NTPC remains top pick. Power Grid, I think, a bit of a dampener because of this draft regulations. But in general, power as a space looking quite good.
Okay, thanks for joining in, Pankaj, and have a good weekend. Good to have you on board. Tell you what, quick break. We'll be right back with more Market Talk.